This was a solid outcome in the circumstances. These national accounts paint a picture of an economy which is relatively robust despite all of the challenges being thrown at it. But it is a backward-looking measure. It is about the September quarter. We have had a number of interest rate rises since then, and some of the challenges in the global economy have intensified. And so these challenges are not behind us, they are ahead of us still when it comes to the global economy. And so that's why we're focused on making our budget more responsible, our economy more resilient to these international shocks, and trying to fight this inflation, which is still our number one challenge.
Is Australia at real risk of falling off what the Reserve Bank describes as a narrow path and into recession next year?
Well, that's not the Treasury's expectation. The Treasury's expectation in the budget forecast I released a few weeks ago is that the Australian economy will continue to grow, but so will the global challenges to the economy. Obviously, some of our international counterparts are faring much worse than we are. We do have a lot going for us. Low unemployment, good prices for our exports, and I'm really pleased to see the beginnings of some wages growth in the data today. But we won't be immune from another global downturn. The global uncertainty is already having big implications for our own economy, particularly when it comes to the impact of the war in Ukraine on energy costs here in Australia. And so we don't currently expect the Australian economy to go backwards. We do expect some of our peers to be in that position. You can see the UK and Europe and potentially others in that position. But we are relatively confident and optimistic about the future of the Australian economy, but we do have to navigate some really tricky international conditions in the months ahead.
We had another hike from the central bank this week. More are likely on the way. This is really starting to hurt people. What do you say to those who are struggling with mortgage repayments, higher rent, businesses at risk of going under?
Well, we understand that interest rate rises determined by the Independent Reserve Bank do put extra pressure on household budgets, and particularly if you signed up to a mortgage when interest rates were especially low, particularly if you're coming off a fixed rate onto a variable rate. We do understand that that puts extra pressure on people. Obviously, we don't second guess or preempt decisions taken by the Independent Reserve Bank, but what we can do and what we are doing is making our budget as responsible as possible. That means providing cost of living relief in a way that doesn't add to the inflation problem, but makes medicines cheaper and early childhood education cheaper and gets wages moving again. And it's also why we are working with the regulators and the states and the impacted industries to see if we can take some of the sting out of these high energy prices, which are a big part of our inflation challenge as well. But I think Australians are pretty realistic about the challenges to our economy. They know that these pressures are coming at us from around the world, but they're felt around the kitchen table, and that's why the government and my economic plan and the budget that we released not that long ago is all about fighting inflation, not adding to inflationary pressures, providing some responsible cost of living relief, and doing what we can in energy.
Respected economist Chris Richardson noted high commodity prices, namely gas and coal, are delivering a budget windfall. Are you banking on that too?
Well, when commodity prices are high, it can be helpful for the budget, but very harmful for Australians and for Australian industry. And so it's a mixed bag when prices for gas and thermal coal and other commodities are high. We take a deliberately cautious approach to forecasting commodity prices. The Treasury forecasts are deliberately cautious, deliberately conservative, because people are wrong to assume that this only ever goes one way. We need to be careful about it. I watch very closely and listen very closely to what Chris Richardson says. He's got a lot of experience, but he doesn't have the same obligations to be cautious and conservative like I do. He's made some points about the state of the budget. Obviously, the budget improves a little bit when commodity prices are high, but there are economic consequences, and we're focused on those economic consequences right now.
Treasurer, these national accounts show the biggest quarterly fall in the terms of trade since 2009. How vulnerable is Australia to a reversal of the current commodity price boom?
Oh, look, I think that there were some specific factors feeding into that, changes in the composition of mining investment, and a couple of other factors as well. Our position has been relatively robust in recent times, and so we're not especially troubled by that development in the national accounts. I think in the national accounts the most troubling features are the measures of price pressures in our economy, which we've just been talking about, but there are some pleasing aspects too, wages one of them. Also, one of the interesting developments in these national accounts is the way that the household savings rate has come down, and that has been feeding and fueling some of the consumption when it comes to travel and services in particular. And so there are a range of moving parts here. We try not to overreact to any one number or another. In aggregate, these national accounts are solid, they are robust, there are some pleasing aspects, but we need to recognise, as you did in your first question, that it's a backward-looking measure and a lot of the challenges in the global economy are ahead of us rather than behind us.
Balance of payment figures out this week showed a return to a current account deficit as surging mining and gas profits increasingly head offshore. Is the government planning to do anything to capture more of that benefit in Australia?
Oh, that's not our intention and it's not our focus. You know, our focus when it comes to energy markets in particular is to see if there's a regulatory outcome here which takes some of the sting out of these high energy prices. That's why we're working more or less around the clock right now with regulators and industries and the states to see if we can do that. We've said that our preference isn't to go down the path of a windfall tax or something like it. We think there are other better ways to come at this big challenge in our economy, and that's what we're pursuing.
Consumers, households have all been struggling with higher energy costs. Can they expect anything from the budget in May that will help them?
Oh, well, we'd like to make some proposals before that, between now and Christmas. We've set ourselves that deadline. There are a couple of important discussions over the next couple of days where we will try and advance and progress an agreed policy here. But when the budget rolls around in May, obviously we'll factor in all of the relevant economic developments. One of the reasons why the October budget was so well supported by informed commentators and the ratings agencies is because it was designed for and defined by the times, the economy that we confront, inflation in particular. And so in May we'll take a similar approach. It will be responsible and restrained like it was in October. But if there are more steps that we need to take to deal with this unfolding global uncertainty, obviously we'll be prepared to consider that.
Treasurer, thanks for your time.
Appreciate your time, Rachel. All the best.